Hello, everyone. I'm Wendy Liebmann, CEO and Chief Shopper at WSL Strategic Retail, and this is Future Shop. This is where I talk to iconoclasts, to disruptors, to innovators about the future of retail. Today, my guest is Diana Melencio. She is the partner par excellence at an extraordinary, she's laughing already, at an extraordinary organization, which some of you may know and some of you may not yet, called XRC Ventures. And XRC Ventures does a lot of investment work in the health, beauty, tech space, retail space, so very close to our hearts at WSL. So welcome, Diana.
Thank you so much for having me, Wendy. I've been really looking forward to this conversation.
Before we begin, I just want to remind you, do us all a favor at WSL Strategic Retail and just click subscribe. It doesn't cost you anything. It just shows us that you're listening, where you are, and we can use that as a way to prove to ourselves that you are out there. I'm not talking to myself all the time. And also, it's a great way if you want to have a conversation with us, drop in a comment, wherever you get your podcasts, whether it's on, Google or Spotify or our website or anywhere else, just click subscribe and then we'll know you're there. Thanks for that. And now let's get on to my conversation of the day. I think I was first introduced to the organization through Steve Sadoff. For those of you who don't know him, ran Saks Fifth Avenue, came out of Clairol City, I think, and is now an advisor to MasterCard, but very involved. And he's the one who said to me, "You've got to know this company, Diana." But for those who don't know the organization, tell us a bit about the company and tell us a bit about what you do and your background. That'd be great.
Yeah, so I'll start with XRC. So XRC stands for Accelerate Retail and Consumer. We're an early stage fund based out of New York and Los Angeles, and we really focus on investing at the early stage intersection of consumer behavior and advancement in technology. And what that means is not only do we invest in the products themselves, like Naked Sundays is a great example, but we also invest in the technologies that help get that end product to the consumer. So supply chain and logistics, help the consumer transact. So commerce enablement, payments, new retail platforms, new retail channels, help get that end product, gain awareness from consumers. So marketing technologies. And then as of the past few years, as the sort of healthcare has shifted really from the doctor's offices into our homes, which was accelerated by COVID, we were spending more and more time also investing across the consumerization of healthcare. The first 10 years of my career was in more traditional finance, primarily buy-side funds, before starting my own company in supply chain, which was invested by XRC, and how I got to know Pano Anthos, the founding partner. And at XRC, I run primarily focus on the consumer practice, consumer packaged goods, but I also sit on the investment committee of the technology fund.
It just feels, I must say, having listened to you and worked with you on boards, I've really learned a tremendous amount. But you don't know this, but in a recent presentation I did actually in Las Vegas yesterday, I quote, and I'm going to turn around and pull it off the wall. There is an XRC quote that I just love. Hold on, everyone. I'm coming back on my other things. I'm still coming back, and I will read it. To thrive in the years to come, the future retailer or brand will need to adapt to operate in a world where every point of human contact is a commerce channel. Doing so will necessitate a complete rebuild of core business models and enablement of the tech stack of most brands and retailers. And so I used that quote and quoted correctly, XRC, yesterday in a presentation for a large organization. And it feels so timely and relevant as we think about innovation for the future, that every point of human contact, it's that journey, all the touch points of the journey become so critical in this process. So anyway, now
we're seeing that now, right?
Right.
There's QR codes on packages. You enter, we envision a future where you enter a hotel and the screen is selling something relevant to enhancing the experience of that hotel stay, as an example.
Right.
So it's really commerce everywhere.
You've seen a lot of change in the last
Yes.
4 or 5 years, pre-COVID, during COVID, now. What are the biggest changes you're seeing?
In terms of like rapid change in the last 12 months, it's really largely around leveraging AI
Mm-hmm.
in everything,
Right.
from personalized communications to product recommendations, which honestly we saw back in 2015, to product development, to generating creative assets,
Mm-hmm.
like put together a picture of me putting or of a no American Asian woman putting on Naked Sundays sunscreen. And there are tools now that will create, some better than others, will create that image for you. And we've invested against that. We've got an AI content generation company called Go Charlie, which does exactly that. Like, give me an image of someone looking in a mirror with a red light therapy wand. And it's continuously improving, but those are some of the things that we've been seeing and investing against now since 2016.
Yeah. I mean, the AI conversation, on a regular guest on this podcast is Justin Honneman from Amazon Web Service. And we talk a lot about, the evolution of AI. And I said to him the other day when he was on, I just feel like, at least for my awareness, the practicalities of it have become so much more evident of late. And I mean, you see it because you're looking as early investors into new things that are emerging. But even in just the broader landscape, he and I talked about the fact that, Walmart talked about saving 4 million programming hours or something and some of their work. And you see people in the stores looking on their phone, not just what's the price, but also what's right for me while I'm in the aisle, things like that.
Yes.
I really find that now so grounded in it's here. Well, it's always been here, right? I mean, not always, but AI has been around for a long time. But this speed to which AI is now transforming businesses big and small seems to be such an important characteristic of growth heading forward. So when you look at companies now, you and I keep talking about Naked Sundays. For those of you who know, full disclosure, we are both on the board of this Australian company, wonderful company in the sun skincare world, founded by the fabulous Sam Brett. And as you think about new companies to invest in, how much of that AI component do you either need to bring or do they need to bring for you to look at a business, not Naked Sundays, but anything else, to say, yes, we want to put our money there, or we can help them grow by putting our money there? Has that become a major criteria for you when you think about investment?
I would say yes, because AI has become ubiquitous enough that everyday people use it. My mother-in-law writes the newsletter for her HOA. I won't tell you her name so that her neighbors will continue to believe that she writes all of the newsletters, but she uses Chat GPT to do that. And it's as simple as I'm building an AI script now to have all of my calendar invites include like my last few interactions with that person and what the topic of the conversation is. So it's not as complicated as, learning languages, but it's really just everyday people using things. There's this great, I think like a better Google called perplexity.ai. And you could literally ask it questions like, I'm going through perimenopause. What product should I be using out there? Or I'm at Target or I'm at Bristol Farms. Um, what are the best magnesium supplements out there? And it will give you a very, very detailed analysis of these answers, citing sources. In terms of investment, I'll tell you a little bit of some of the things we're doing to source consumer packaged goods. So we have actually built an AI tool to scrape the World Wide Web in categories that we're highly interested in. So we're interested in sun care. We're interested in eczema, pet supplements, a variety of consumer product categories, and we're able to surface 60 to 70,000 deals every single month, sort it by monthly visitors or revenue. We won't always get the revenue part right. We're ballparking it based on data, but that is the first step of our sourcing process. It's no longer founders coming inbound to us like, hey, I'm fundraising. We're very thematic investors. We talk to a lot of CPG executives in at large strategics, publicly traded companies. So we sort of take our AI tool as one part of the Venn diagram. The other part is strategics telling us we want to acquire in these categories. And then from there, we sort of like hunt at the intersection of those two of that Venn diagram. So that's from a sourcing perspective.
Mm-hmm.
When we look at technology or even the operational processes of these consumer brands, we're constantly looking for, okay, that onboarding process feels manual. What can we do? Where is it on the roadmap to how we can automate that and generate greater scale?
Yeah.
Like as an example, we something that we saw in our data was that when customers DM direct message brands on social media, they have high intent to purchase, whether that's a direct message to the brand or in the comment section.
Yeah.
And so we found a company called Nectar Social that learns the voice of the brand and replies. You can press it at scale, or you can press it as an assistant where you review the comments that they're suggesting or products that they're recommending, and does that personalized communication at scale. And so it's literally, what are you doing manually? How can we scale it and add value for the customers as well using AI? I think it's imperative to use it to grow quickly in today's environment.
Yeah, it's so interesting you say that, because I remember doing some work for a private equity firm. Oh, I don't know. It sounds like 1,000 years ago in tech terms. And they asked us to do some due diligence for them, both with retailers and looking at category and looking at our shopper sentiment work, to just give them some, context for where things were. And I remember it was so manual in the day. That was so manual, and the ability now to use technology, to use AI in whatever form to begin that process and all of this. Are there some industries that you see are doing a better job of incorporating technology than others?
We're specialists. So within the sort of like subsectors that we invest, supply chain has probably seen the most investment and the most advancement, and every part of the sort of supply chain is getting disrupted now. I would say grocers are doing a better job than retailers, which are often the last people on the innovation chain. And then like emerging brands are also at the forefront for testing new things, particularly when it comes to growth marketing, performance marketing. I think a lot of the CPG companies are not only acquiring those companies for inorganic growth, but also for digital capabilities.
That to me is really interesting, watching some of the really big CPG brands in the, for example, beauty space, like a L'Oreal, who realized they needed to really up their digital game in every aspect of their business, and invested very heavily. I'm sure there are many others, but that one struck me because it was a very concerted effort to say we need to be thinking about technology and digital in every aspect of our business, from innovation to how we communicate with our shoppers, retailers, all of the above. You made the distinction between grocery and retail. How do you distinguish that? What does that mean?
Like for example, let's take one piece of it, which is the adoption of retail media networks. So just to break that down, a retail media network is really any owned property that a retailer owns. So whether that's their newsletter, coupons, their website, on cart, in store displays. It's one of the fastest growing revenue lines for grocers. And it's because they have so much data on which brands are doing well, what categories. And so now they're selling that real estate in their retail media network to the brands that they have in store. It's absolutely brilliant. And grocers are at the forefront of that versus retailers. And I guess that's the difference between like CPG, F&B, consumer packaged goods, food and beverage versus apparel and accessories and consumer durables.
Yeah. Yeah. No, that's helpful because we would lump those all into retail but absolutely right. Everywhere you go, retailers, especially grocery retailers, but lots of others in that CPG, fast moving consumable space are really doing so much work.
Yeah, I think it also depends. I would say like some innovation I've seen from, I guess it's more of a brand is a Uniqlo, for example. Have you been to New York store where you drop
I know.
the bag?
Stunning, right?
You drop your stuff into a bag right before you exit, and they pull it up. So companies like Fast Retailing, who owns Uniqlo, Comet Lang, and Theory, are doing a lot of experimentation on the technology side.
Yeah. And if you haven't, listeners, viewers, haven't gone to a Uniqlo store and seen that, you literally take a mixture. It could be your t-shirts, it could be your undershirts, it could be your sweatpants, whatever it is, in a bundle, and you literally drop them in what looks like a bucket right next to the checkout. It's part of the checkout. And all of a sudden it reads everything and it's there. So it's not somebody scanning it, not somebody taking off the label things that, they forget to. I mean, it is amazing. And you think, how did they know this? Way better than, sort of weighing the groceries and did I get all the groceries right in the self-scan at the supermarket. Quite extraordinary. So when you look at that and then you think about the labor, the correct information, all of those things, it really is stunning already in our everyday lives, right? All of that. Yeah. And you just made me think about, on the one hand, we've got drugstores that are sadly having to lock up so much merchandise. So then having to create an app that helps you open the locked door to get into something. And there's Uniqlo dropping it all in a bin and saving all that time for figuring it all out. And then you can just put it in your bag and go, kind of things. So when you think about retail, where do you think beyond grocers, and Uniqlo, are there other types of retailers who are exciting for you in terms of either investment potential or for the brands you invest in when you look at a sort of a distribution strategy? How do you think about that? How do you evaluate that when you're ready to put your money in?
I'll answer two ways. So the first is that if you're a CPG company, you have to go into retail. People want to touch and see the product. And frankly, because of the iOS 14 changes and the rising prices at Meta, in particular, is very challenging to be profitable in D2C. And so nearly from early stage growth to acquisition, it's now become an imperative for consumer brands to firstly like start thinking about retail in their product roadmap, because it's just more sustainable growth, particularly in like beauty and personal care. I mean, F&B distribution is everything. So I'll put it that way. In terms of retailers and like what we look for from an investment perspective, I would say that I'll answer it three ways. I would say that we have publicly traded retailers that are investors in our fund. The largest global mall operators are investors in our fund, and we do leverage their insights to understand what are some near-term pain points, because unless it's near-term, they're going to punt it. So what are like near-term pain points in terms of what you're solving for on the technology side? So we use retailers for diligence. from an investment perspective, I don't know that I would say that it's very challenging to invest in a retailer or like a marketplace. There's demand and supply challenges. Once a brand does find success, they'll immediately want to diversify um, their distribution. We partner with large public retailers, and then retail as a channel for CPG is a mandate if you are pursuing institutional capital.
Yeah. Yeah. One of the things that strikes me, particularly in this country, where growth for CPG brands, but not only, has been very much, I've always called it a real estate play. I mean, retail, okay, we want to grow, we're opening more stores and more stores and more stores and more stores. And clearly that's not the solution anymore. So when I'm a brand and I think about now, where do I go? Where do I grow? And how much can I grow in the shrinking physical retail space? That becomes, in some ways, more of a challenge, I think. And do you see it that way or not really?
Yeah, I think retail has really become a showroom, especially for certain categories, because most people shop with their phones. If they have the time to do cost comparison, it's a little different at grocery because you're shopping for near term needs. So for longer term, larger investments, you're really looking at a showroom model versus, for example, the discount retailers who are driving deals and newness every week. And it's actually a really great channel also for brands to offload maybe some like low performing goods.
Mm.
So yes, I think it still has a place. People want to touch and see and taste and try on goods that they want to purchase, test out beds, etc. But I think the transaction more and more, unless you're incentivizing them with promotion or service in store, I think the physical locations will play a more as a discovery branding tool. And even for CPG, they'll do replan on Amazon.
Yeah. Yeah, it is so interesting. You remind me of a conversation again on this on Future Shop. I had a good friend, Norm de Greve, who was the CMO at CVS drugstores, and is now the global CMO of General Motors. But one of the things Norm talked about, we talked about, the day when you go to the showroom to get your car and you talk to the salesman and you get all the information there. And now how that shopping journey has changed so much that people do so much homework before they go, pricing, features, all of the above. And really, it's only at the very end when they've made their choices, often already made their brand choice, that they go into the showroom to sit, to smell the leather, to see how comfortable the seats are. Does it fit the golf? Because somebody said to me 3 sets of golf clubs or something. Why anybody would want 3 sets of? Don't go there. I don't know, each to their own, but whatever it is. And so even in, industries like that, he's talked about, how do you think about the quality then of that showroom experience? Much more about this immersive last step in the process to close the deal rather than that beginning step of what's my considerations. We see obviously in lots of our work that, people, to your point, still want to go and touch and feel the goods, and younger shoppers especially, who've not grown up that way, see it as actually quite exciting. So, but
yeah, I had dinner with a very successful founder of a brand and an agency. I don't know if like trading down is the right word, but they'll find maybe like the product skirt that they want and they'll see if it's available on Resee,
Yep.
which is a reseller based out of Paris, or the Real Real. Like you are price comparing designer goods. So yes, I think you have to find a compelling reason for people to go into the store.
Yeah, yeah. I mean, and in that instance, the brand could be so well known. So the ability to, use media and all the new forms of media to continue to build that awareness. But once it's done, do I have to have hot off the presses, or could I go to a resale, consignment, whatever?
Yeah.
I think there's some of the things that we that have moved very fast. We assume people with lots of money will spend lots of money, and we actually know part of the reason they have lots of money is because they're smart about how they spend it. So anyway, we're at a moment now, obviously, with what feels like tremendous financial turmoil in this country. And so how are you seeing all that discussion, whether it's about tariffs, whether it's about inflation? I mean, all of those things, how does that impact how you're advising your companies and considering new investments?
I will take the investment perspective question first, and then I'll go into tariffs. I would say there's a bifurcation I'm not the only one that investors are looking at in terms of price. So you're looking at prestige, so you have enough margin because you're selling less, or you're looking at mass. A great example in beauty is Bubble on the mass side pursuing in your home country of Australia,
Right.
Kohl's versus Mecca.
Right.
Or in this country, Walmart versus Ulta and Sephora. And then you're seeing other brands, which I won't name, charging almost $400 for a perfume bottle.
Yep.
And that is doing well enough, particularly on the profitability side, because they've got 90+% margin. So I would say on the investment side, you are trying to figure out how to maximize margin. That's both in the channels that you're operating, but also in your contribution margin. So for something that like Mumble, you need volume, you need mass adoption, which it has successfully done. It is an incredible company and doing really well. We are not investors. And I think some of the brands that are in the middle and not necessarily, and I'm just talking from like the brand side, even frankly, like the store side, and not really seeing a differentiation, just competing on price.
Yeah.
It's almost like a race to the bottom. So how are you, even like the middle market retailers, how are you differentiating yourself?
Yeah.
On the tariff side, so to get scale, to have like an outsized venture return, and I'm sort of like centering it on like CPG. It is that is determined in the United States. Like the sales are determined in the United States, and I think a lot of American companies and other companies like try to pursue channels like APAC, which is very difficult, even despite its size, or Europe, which is I think brand establishing, but does not have scale and has a lot of geography complexity just from a regulatory language standpoint. So because we are focused on venture scale, and predominantly you achieve that by penetrating the American market, we've seen less impact on the tariff side, though it is a conversation that we're having in nearly every board meeting that I've been in over the course of the last 3 quarters. So it's something that everyone is monitoring and starting to diversify from a like a sourcing standpoint. Even if the impact is say low single digits on the margin side, they're already actively talking to suppliers, local suppliers now, just in case the tariffs start to have broader reach.
Yeah, it's been interesting in work we've been doing of late. Again, shopper sentiment work. Even though there's this sense of, I guess it's the uncertainty, right? But that whole conversation from a shopper perspective of being increasingly cautious, starting to say, I don't know, if I've got money, I'm going to wait a little bit. The market doesn't make me comfortable. Or if if I'm just a regular, right? What will I do? Will I trade down? Will I use up what I've got? Will I wait for that big purchase? All of that. Or will I buy a car fast before I need new parts that are coming in from somewhere else? So lots of those considerations around that, and that uncertainty about so much obviously of the economy is driven by consumer spending. So that just nervousness and will people have the patience, not that they've got any options, to wait. So thinking about a lot of those things are the things that we're looking at quite closely. Do you see white spaces that maybe, without giving away the secret sauce, that we haven't talked about yet, that you're keeping an eye on?
Anything that lowers healthcare costs, we are actively looking at whether it's democratizing radiology, which is one of the highest spend areas, not only in healthcare, but actually for employers. So we made an investment in a company called One Imaging as basically like a marketplace. It is a commoditized service, but depending on where you go, you get one scan that costs $200. Same exact scan, $3,000. And if you implement that with a large enterprise, say you're employing 20 plus thousand employees in the US, that's a single digit impact to your EBITDA margin immediately. And so there's things like that on the healthcare side that impacts retailers in particular because they're one of the largest employers. We've deployed a lot of capital in some of the categories that we already talked about. Retail media networks, AI and machine learning was part of Fund One. I will say that everybody, including the consumer, is focused on like true efficacy.
Yeah.
And so how can you build products with that, or invest in companies with that DNA versus product marketing oriented consumer brands, or retail positioning?
Yeah. Yeah. It does feel, I saw today that Pepsi bought Poppy. And so, so interesting. I was wondering who was going to buy it, right? Do you see any of the big CPG companies who have created an internal innovation model in whatever form, whether it's product, whether it's marketing, supply chain, I guess I would say, all of those areas, that companies that, as opposed to acquiring it, do you see that there are companies that have that, we're going to invest in doing it ourselves? Or is it now a mixture of always both? Or some companies say, we can't do it fast enough or efficiently enough, we're going to buy it. So where does that fall on the spectrum of companies that you look at?
That we work with? I would say that most companies have become self-aware that they're not strong on innovation or brand creation. And that's simply the bureaucracy, the decision-making process internally. My experience being privy to some proprietary brand building at some of these CPGs is it takes them 2 years to, if they had an idea, they identified a white space. Firstly, they have to identify the white space. There's work that needs to happen, but let's just say they did all the work, or Bain did all the work, or BCG did the work, or McKinsey did the work. They identified a white space, and now they want to pursue it. It probably takes at least 2 years to get to market.
Yeah.
So, for example, I know of a couple of incubations that took like several years. Small tests, stopped it. Stopped it. Versus starting a brand now. We're not investors in this either, but there's this company called Georgie, and I spoke on a panel with the founder at Expo West, and the first thing she did was She asked her friends and family to send a form out, like a customer questionnaire out, not for them to fill it out, but for their friends and family to fill out. Like, I'm trying to build this better for you. I think at the time it was a supplement, but now it's morphed into a beverage. What form would you like to see it in? What are sort of the ingredients or minerals or vitamins that you would want? What are the flavor profiles? Where would you buy it? How much would you pay for it? Um, and this is in contrast to some executives I know that have started uh, left very large brands and started their own brand and ran um, focus groups just on the name.
Yeah.
So it's it's a very they go so much faster. She launched within like a few months.
Yeah.
So I haven't seen too many successful incubations internally. I don't believe internally there's the right independence, there's the right autonomy on P&L and testing to, break things go fast,
Yeah.
which is what you need to do if you're trying to, if you're trying to take advantage of trends that you're seeing right now.
Yeah. Yeah. No, that's always the thing that's so that strikes me these days, that, the iterative process, and I guess the risk if you're a big public company, of that, but the speed at which, it's like, let's put on a show. I've got a great idea. Who do I trust? Friends and strangers, friends and family, ask the question and, begin to build and move and learn and iterate and all of that. So it is extraordinary times. And you sit right on the edge of it because you are looking at, what did you say, 60,000 things you're scraping?
60 to 70,000 brands on a monthly basis, just on brands. On the technology side, we're probably reviewing, I don't know, around 50 to 80 a month.
As my last question, because this has been not only very grounding, but also inspiring to think about how we all have to think about doing business these days. Your favorite place to shop? You're a mother of a young one.
I shop direct to the brands because I see so many of them. I'm a fan of the brands that I've invested in. So Naked Sundays is definitely like high on my list. I'm wearing them today. I wear them every day.
Yeah.
What
would we do if we didn't have that now, right? Every day. It's like my makeup. Sorry, every
you have to reapply. But from a fashion perspective, and I think I could say this because I'm not invested in anything, like it was interesting last night because these, like the founder that I had dinner with had an exit to a very well-known CPG company. So she's doing really well, house in Beverly Hills. And we were talking about where do we want to shop? And I don't think we're not like, we didn't say Saks. We didn't say, sorry, Steve. We didn't say Barney's because that's gone away. And I was a big Barney shopper when I lived in New York a few years ago, before RIP. No, we shop at like the Real and Reese. I love Reese. It's super well curated. I'm a big fan of the Real. I guess those are the most relevant ones. I mean, on the grocery side, I buy all my staples at Whole Foods because Amazon has all my information and they remind me when they think I've run out of stuff. And for things like milk, because I have a toddler,
right.
I buy like gallons and gallons of milk every single week. And there's other like snack things that I purchase. And then for sort of like when I go in person, I'm an Erewhon member.
I knew you had to go to Erewhon.
I live very close to one. And so I walk there and it's just a very relaxing, and honestly, everything is good there. Everything is high ingredient quality. Their buyers for their CPG categories are actually very good. I'm surprised at how many of the companies that show up on my screen are showing up on shelves at Erewhon. I should probably try to get a hold of them and figure out how they're seeing brands.
How they're doing. Yeah, and you'll buy the $16 smoothie because you'll feel good after you've had it, or whatever that
It is delicious.
It
Like,
is.
I don't know how they made liver in a smoothie taste delicious, but it actually is.
And it's good for you, right? It's amazing how we can all be very theoretical, practical, financially driven. And then when we talk about shopping, it's the best. You know, we talk about our passion and so much we learn from each other.
I was in Miami recently. The curio at the Faena and the bazaar, they're very well done. It's very expensive and it's a very Miami colorful, resorty look, but it very much reflects like the clientele. It reflects the environment, but it was very well. I haven't been in a shop like that since like Colette in Paris existed.
This was terrific. I knew it would be because you have such a unique and compelling perspective on this world and where we're headed. I wish you well in these turbulent financial times. I think there's opportunity in all of this if we are optimistic and look for it. So thank you, Diana, as always. And no doubt I'll see you across a board screen.
Yes, yes. Thank you, Wendy. It was great to be here.
There's almost no reason to summarize what Diana was talking about today. She was so clear about this, you know, where to think about, or where they, as an organization that invests in companies and really accelerates their growth, how they think about where are the opportunities. I mean, scraping the internet, scraping the world to look for emerging companies in their categories of expertise, recognition that big companies today are not fast enough, are not agile enough, are not financially willing enough to take the risk to innovate quickly. Also, seriously thinking about the role of AI. You've heard us talk about it with Justin Honeman most recently, the role that has in terms of accelerating growth, whether it's behind the scenes in supply chain, whether it's efficiency in marketing, in so many ways today that makes companies, especially small companies, more efficient, but really big companies and the dollar signs there. So Diana gave us a very concise roadmap of how a company like XRC really looks to invest and the criteria for all of that in this new fast changing world. And she, like the rest of us, will keep our eye on the impact of the financial turmoil we are all trying to figure out, including the T word, tariffs. Speaking of the future of retail, I will leave us all with that thought and see you in the future. Cheers for now.